Welcome to the Investor Impact Power Talks with Vinney Chopra, where investors gather to share their insights and strategies in the world of multifamily, real estate, and beyond. Get ready to be inspired and equipped for your next level of success.
Hi friends, this is Vinney Chopra from here in Danville, California. And you might be saying, hey Vinny, what are these over here? You know, I wrote this book a few years back, Apartment Syndication Made Easy. It became top seller. I came from India with $7 in my pocket. It says 500 million. It's going to be 1 billion very soon, very soon. I'm right at about 850, 900 million. And then I'm ready for the next billion. Actually, you will see that happening, 2 billion in this book also. The other book I wrote, which has been a very big positivity, has been my life. Always, I've been married 43 years with 2 children, and the beauty is to be positive, the mindset that can take you to all the places in the world. And that's the book that also became big seller. My third book, Senior Assisted Living, is coming. So do yourself a favor, go ahead and click the link below to get free copies, audio copies of these books, even printed copies of these books. Printed means digital if you can't afford it, but I would highly recommend for you to get these or go to Amazon.com. Just go to Amazon. I got it in soft cover, in hardcover, in Kindle, in audio, also the Spanish version of this book also. So let's crush it, guys. I know you can be successful. I know you can do the kind of things that you want to do in life and have the streams of income and know how to really, educate yourself so that you could become a strong force in this world in real estate. I know you can. So take that step. Don't just be on the sideline. Take charge of your life. Take charge of your education.
So true. And the seller is losing money. It's sitting there.
He's probably got paid from his insurance company and is already whole.
Yes.
Probably doesn't care. So it's one of those situations where you could probably get the seller to agree, hey, I'm not going to make any payments to you for 6 months, but I'll give you, if you'll carry financing for 3 years and an extension, but give me 6 months, no payments. I'll give you 5% for 3 years. If I go past 3 years, I'll give you 8%. He's probably very open to a lot of creative financing. I think this will be gone by tomorrow.
Can I ask you a question? I think that they will have to do creative financing, right? They will have to do seller financing. The lending itself probably won't even be able to be done.
No.
Banks are going to say no just because, forget if you have insurance or not, it's a disaster area. So they're going to come in and say, I won't even lend on it.
This is a hard money or a seller finance.
Seller or hard. Yep. Seller or hard. Huh? Farooq, you are muted out.
Oh, I'm sorry. My question was, how long does it take in this situation where is a disaster area, floods or whatever, for the insurance to go back to normal or at least somewhere that's decent enough? Like a couple years, or when do people forget about the disaster and then the market comes back again?
I think you've asked the $1 trillion question, because I don't know if it'll ever go back through. I really look. Really? When I say ever go back, insurance companies are a glorified Ponzi scheme. Okay, they bet on, to say that, they collect premiums based on actuaries and determinations of the possibility of claim. Now they're realizing we have to plan on a full replacement. This is what I've heard recently on a podcast. We have to plan on a full replacement on every building we insure in 20 to 30 years, is what they're saying. So whether that's true or not, I have no idea, but it's certainly the reason they're justifying the rates. So if they're planning on, literally, let's just say they have to plan on a replacement in 20 years, they have to make a profit. That means you're literally, in insurance, going to pay for your building plus the insurance company's profit every 20 years. That's a big number.
Wow. So that can change the whole market forever, right? That can put a lot of downward pressure, like big time, right? Because so many people are like in the situation where this increase, they cannot sustain it, or right, or they would not be
So
able to
true.
make money.
So true. So true. I know I've heard Mike had come in, right? His insurance went 300% up. 300%. How do you survive? You
What
just
area?
cannot survive. Huh?
What
Yeah.
area?
Oh, I think it was in Ohio area or something. I may be wrong, but he lives in Phoenix now, Mike Fritz. But he was sharing with me, and I think he came back to our class also,
Holy
and
cow.
he was sharing that insurance went up 300%. Just
So if there's a disaster, pretty much
uh-huh.
like you get the claim, right? You get it, but then your insurance goes up 3-4 times. But then at that point, you probably have to sell it, right? You're not gonna be able to recover, right? Because the expenses go up, and right, it's pretty much over for you. If so, so then what's the point of insurance? Like, it covers you for that instant, but it's literally, as you said, it's a Ponzi scheme, right? You're not getting much benefit other than the initial, like whatever happens, that disaster, that event, you can recover from that, but going forward, it doesn't make sense. Just like car insurance in California, right? The insurances have jumped so much, like they don't insure you anymore.
Yeah.
See, that's the thing. They choose. Then I know you had hand up. The big thing is insurance companies are there to make money, but these disasters are just killing them. Like when I was in Texas, Harvey and others, and flooding and all that, and these tornadoes, look at that, billions of damages are happening now in North Carolina, in Georgia, in Florida, all these Milton and Helene, I think, right? Both of them. Yeah, it's all boils down to what it's going to cost to construct it back again. Yeah. So
But
if you had a question, oh no, go ahead,
no, I
Dave.
was just
Yeah.
going to say, and Saurabh, yes, the reality is, okay, but that took the price here from 265 a unit down to now 75 a unit. It's only going to take 25 to bring it back per unit. So
Yeah.
500.
Yeah.
So
Yeah.
we always say there's risk in investing in real estate. Okay. You could run from the risk, but what's not going to happen is people are not going to abandon Florida. People are not going to abandon California. Like,
No.
I think Farouk, you asked earlier why Vinny's not investing in California. He doesn't prefer California. Smart investors will move to other areas, but there are risks in other areas. Snowstorms can collapse roofs, all sorts of things. Pipes break from frozen pipes and those. So no matter where you invest, there's always risk. And so I will tell you this, knock on wood, Jacksonville, Florida has not had a hurricane in 45 years.
Oh, wow.
Uh-oh.
You're
That's
at the right tip. You're at the right tip on this side, on the east side.
You know, I'm in Jacksonville, but that doesn't mean we don't get storms that come across the state, but we have not had a direct hit in 45 plus years. So a lot of investors are really, multifamily investors, it's really high price in Jacksonville. But hey, investors are still in. What's crazy is Miami hasn't had a direct hit in 25 years.
Yeah.
So it cycles. But hey, where there's risk, there's reward. That's why you got to buy right.
Yeah.
Nothing cheap. Sorry, Saurabh, please go ahead.
No, go ahead, Sarah. Yeah.
Yeah, I was just, and I think Dave, you answered it while you were speaking right now. I was just going to ask, like, why is this deal so good? Why was it like going from 265 a unit to 75 a unit? And it's because of this hurricane that happened, right? And because it's completely vacant. Because just yesterday I was looking at a deal and I was more than happy to offer in it. But this deal was in the heart of the Midwest in Columbus, Ohio, right? And I'm trying to optimize for rent to price ratio right now because rent to price ratio would basically optimize for cash flow, right? But even in Columbus, Ohio, this particular deal wasn't making sense because the rent to price ratio was not that great. So yeah, I just wanted to know why the deal is so good, but looks like it is because of this star.
Yeah. Dave,
Yeah, the deal, because it's stabilization, you mentioned Columbus, Ohio. There's a lot of stabilization in like Gary, Indiana, which can be, I listened to a podcast not too long ago. There's somebody who's doing nothing but stabilization in Gary, Indiana. and they're making their investors 45%.
Wow.
Okay.
Wow.
So you can find that in Chicago. You can see when you have I'm not so sure. This is my old flipper days, I guess you could say. I'm not so sure value add is as easy today as stabilization. Franco brought up, might be harder to get financing, but if the seller's sitting on something that ain't making money, the likelihood that they'll finance you goes way up. So now you have easy financing, no qualified financing. You still have to bring money to the table. I mean, you're not going to be able to do this without raising money, but at least the money you bring, you're in a lower risk situation. And if you can get favorable financing, if it's going to take you 6 months to get income, defer payment for I'm not going to make any payments to you for 6 months. Will every seller go for that? No, but what about 1 out of 10 or 1 out of 20? It's about making offers. Encore and I are making offers on things every single week. We get a lot. I will tell you that.
No, that's so good. I'm glad, Dave, you brought it up. I was just thinking about Pramod. He bought that 78 units with zero money down. He got the seller to sell the whole thing at 3 million price. And he says, I'll bring the renovation dollars. And the seller thought it's going to be at least 5,500 per unit to renovate. He's doing it for 2,250.
Oh, wow.
Yeah, and he's told me, because he's a flipper also over there in Chicago area. He said we took every piece of wood, everything that we could reuse, we took it, and rather than just dumping it all out and everything. Yeah, so interesting. Maybe this seller also may go for that. He's in a very tough situation, but the insurance, you have to figure it out. What the increase in rents have to be to take care of that insurance piece.
So I think there's a negotiation. This is my opinion, but if you're going to insure commercial real estate in Florida today, my thinking would be you take $50,000 and you escrow it and tell the insurance company,
I see,
I'll take a $50,000 deductible. You won't pay anything on the first 50,000, but I don't want these astronomical. And so put this money aside, because they're not going to let you do a $50,000 deductible. The bank is not going to let you do it unless you put the money aside. So you raise that on the front end and you go negotiate with the insurance company. These are ways to get back to reasonable rates, but it's going to be very high deductibles. The bigger the complex, the higher. Vinney buys 300 unit apartment complexes. Those big complexes, you're probably looking at, hey, we're going to put $1 million aside for deductible if you want to buy in Florida. And the insurance company's going to love that because they're not going to be on the line for the first $1 million. And most storms don't cause $1 million of damage. So they're going to be fairly protected in that transaction.
That's so true. I was just reminded also, I think that whole Tampa, Fort Myers, that side gets hit all the time. I remember when I had Punta Gorda and Cape Coral senior assisted living, we got roof blown off, certain places, leaks, even though we built it brand new, still. And we do block construction in our senior living, so it held pretty good. But you're right, the brunt just comes on that side, not on the east side, but the west side of the Florida. But let's just talk also. I have heard a lot about Huntsville, Alabama. I know we were digging into it. So let's dig deeper into Huntsville. Is that still there are opportunities out there? Or should we just close our eyes? Or what's the thinking on that?
Huntsville and Birmingham.
Those are very good. Yeah, exactly.
Birmingham has got to a point, if you guys don't know the area, it's got to a point where it's almost like almost a suburb of Atlanta now. Atlanta's sprawl has got to where some people live in Birmingham and they commute and work in Atlanta for the week, and then they go home to Birmingham. So Birmingham is beautiful. It's like shaped like a U. You got the top of this. It's like a mountain, and then the valley. It's a cool place. And Alabama, once again, if you guys, that's what you got to look for is find a market that maybe doesn't have all of these problems. I love Florida, but I just don't know about investing in Florida real estate right now. There's a lot of so.
So how about Indiana too? No, go ahead. Yeah,
no, I was just going to say Huntsville, Alabama. I told so many people who will not believe me. It got rated as top 10 places to live in.
Yes.
Most places in the United States, which has and it's the median house price is a bargain.
Over there, yeah.
Over there.
About Alabama, we say Alabama's also the number one place where you can marry your sister. So
I believe you. Hopefully not in Huntsville.
That's a good one. That's a
but
good
that has
one.
nothing to do with real estate. That's just a joke.
Yes. So should we look at what's the average price per unit over there? Has anybody looked at any property or anything? Alabama, Huntsville. I was going to look through as we are talking right now, look through Alabama in my email and see if we get anything over there. Offers due. Look at that. Dotland, Alabama. Let me show you then. Why not? When did I get that? Today only, 11:44. I got this deal. Let me share my screen right there. You could all see it, right? So I just searched for Alabama. Ben Skinner.
Oh, Alabaster Bay. I got that email today too. Yeah.
Look at that. Offers due. Marcus Millichap. Boy, they're doing their job. Click here to get the financials. Of course, the call for offers. How big is this? Oh, 56 units. There we go. Right there. And qualified investors, Alabaster Bay. Okay, located in the Dothan, Alabama.
Dothan, Alabama, which is about 2 hours from Tallahassee, Florida.
Oh, okay. Got it.
Just over the border.
Oh, built in 2001. So it's a 24, 23 years. I see right there. How much they want? Dave, did you see that? Oh, 12, 2-bedroom, 2-bathroom.
All for office. They have not put a price tag on it. I haven't called them. I'm sure they have a whisper price, but I have not.
Yeah, sure. Property interiors look good, not bad. Swimming pool, brick building, and these are the guys. Of course, the key thing is to just find one, and then you say, hey, anything in the pipeline? You got this one coming out. It's pretty quickly. I just got this. Hold on. They're over here in Orlando. Their head office. So it's the Marcus and Millichap SP Multifamily Group that is listing it from Orlando in this place. So they might know the seller or something. Hotel Reno. This is the same right there. We just saw that. Any other one coming up here?
Let me show my screen for a second, Vinney.
Sure. Please do.
Email that I just got was several days ago, but if you look here, these are all Alabama properties.
Yes.
For offers, 208 units, Greenville, Alabama, Selma, Alabama. All of these are going on in Alabama. Some are under agreement, some are closed, but this is just one listing. And this is a Marcus Millichap. If they're doing a lot in Alabama, it lets you know that's probably a pretty hot market. Florida has cooled a little. So I just wanted to show you that.
Oh, thank you. Wow. Maybe should we go to Crexy right now and see, are there some smaller units like 60, 50 units also? I know these were 200, Dave. We saw some. Who has got the login for Crexy?
I can do it.
Ankur, okay, thank you.
I was anyway looking at local multifamily. I'll
Sure.
Really looking at this, and I'll open that other one up.
Sure. Oh, that's it in your backyard, right?
This is in my backyard, but it's not Seattle, right? It's not my county, which is It's not the Seattle county. It's basically an emerging market in Washington.
Oh, I see. Tacoma, yeah.
This was interesting. I'll show you.
Hang
on one second. this around. Yeah, so this is what I like to check. So
in this zip code.
In this zip code, I found it interesting. 188 days, and
Wow,
it's a
long
decent
time.
size one, 4.6. But I'll show you one more thing which was interesting. You usually don't get anything in Tacoma. It's hard to come by. So this thing just popped up on my. I can of course find out more about it, but here I can show.
The cars look good, means good residence. Yeah.
You got water view on the back side, huh?
Yeah.
Yeah.
Tacoma is a underrated city.
You and I put an offer in on another one in Tacoma, didn't we? For a while back.
Yeah, Wenatchee.
Wenatchee, okay.
Oh, in Wenatchee.
That is east. Yeah, that's also you know what, Dave, you mentioned that Wenatchee is a fantastic market for assisted living.
Okay.
Oh, wow.
Yeah, it's got assisted living and wineries.
Oh, wow.
Yeah.
Oh, that'll be nice to look into that.
Yeah, so this is.
Oh, nicely done. Cool.
Needs a little work, but yeah.
Yeah, really nice. I saw it was 1915 built.
Yeah, pre World War
1925. I just saw, yeah.
Yeah.
Outbreak.
Yeah, so this is the other thing that caught my attention.
Short-term seller financing. Oh, right. That's good.
Yeah, short-term means short-term can become long-term.
Yeah, for sure. Interior renovations, potential. Good benefit.
How many units is that, Encore?
Say that once more.
How many units?
How many units?
How many units? This was, I think, 28.
28. Yeah. Okay. Yeah.
164 grand. So not too bad. So.
Yeah. So just to give an idea, right? Where did that go? Not this one. I'll tell you what is the median.
So is there, Encore, is there rent control in Washington State?
Answer is, I don't think there is like rent control like that. I'll have to find out. There like different counties have like different things going on. If you go to Spokane, it's not, or if you go to Eastern Washington, it's not as tenant friendly like if you are in like downtown Seattle. So there are, but I'll have to find that thing out, Dave, for this particular zip code. I don't think this is as bad as. Right. I'll just show you one more thing. So median sale price of home in this zip code was $725K.
What? Oh my gosh. 725.
So at 165,000 a unit, that's not bad at all.
Not bad. No.
So that's really, this is the benefit of this is economy of scale in this area. So I don't know. I don't think they have, I think they have the OM as well. You want to check?
No, they were saying that you have to renovate. So they are not renovated. They looked pretty good. Why do you want to renovate more? I'm just thinking.
Let me check. Are you able to see my OM?
Yeah. Okay. Sure we can. Okay. Oh, heavy value add. Opportunity located in a highly sought after stadium district of the Tacoma. Yep. Pricing market. Okay. Oh, there was no pricing given then. Not yet.
Well, they were asking 4.8 million on the Crexy.
Oh, yeah. They did. Okay.
4.6 or something. Yeah.
Got it. Oh, there is the subject property. Very close to water. Oh, okay. There is. Let's see. Yep.
Parking seat, laundry on facility.
So the electricity's been upgraded. The plumbing's galvanized in PEX, which is good. It's upgraded. 17 one bedroom, only 9 studios, only 2 2 bedrooms. What's amazing though is the unit I was looking for in Florida, what we were looking at. Look at the rents in Florida versus like the rents in Florida were as high as almost, except for that 2 bedroom, almost as high as the rents in Tacoma, Washington.
Tacoma. Yeah.
I'm going to do a quick check.
Uh-huh.
So essentially, this is 9 bedrooms at 1002, 17 at 1124. This is in place rents.
Uh-huh.
21575. And this equal to what? Sorry.
In 7.
And that is this.
We're not seeing what we're just looking at the.
Yeah. Yeah, we are just
oh.
looking.
Oh, sorry. Yeah, let me share
That's
again.
okay.
Sorry about
That's
that.
okay. Sure.
I'll share the whole screen. So I'm just doing some quick math.
Okay.
So let's just say 50%. This is NOI.
Yeah.
So then let's just divide this by 6. I don't
Sure.
know,
6 cap.
rate.
6 cap. Yeah.
So 3.12.
3.12. Okay. And they said how much on Crexy?
They said 2 point. No, wait.
Hmm.
Come on.
4.8.
4.6.
Was it?
Yeah.
4.6 something. Yeah. Oh wow. So they put.
It is lower price for sure.
Yeah. And then again, you have to also count into it, Ankur, the rehab. That's going to be on top of this price. Yeah. And the finance and everything of that. I don't know. What's the occupancy of it? They didn't say. Did they say? Occupancy was fully occupied. 50% of in-place rents, over 50% of in-place income, current rents. Occupancy, 98. Yeah. I wonder if it's 6 months, leases, all that stuff. Yeah. And it's bill paid or not bill paid. That's the other thing, right? Many times properties like this could be all bills paid, then you're not really collecting the total rent. It's just less than that, maybe $150 less, because that 150 pays for water, trash, gas, whatever, right? If it's common meter, electric, yeah, everybody pays their own electric, but otherwise. Let's go to Huntsville. We have some time here. Yeah, Huntsville has been a pretty strong market, and Birmingham, just like you said, Dave, right? It's the extension of Atlanta now over there. Oh, look at that. Okay. Yeah, unpriced. Okay, right there. Can we filter by units also or no?
Yeah.
Oh, we can. Multi.
You can. But then where they have not mentioned units, they'll get filtered out.
Oh, I see.
Yeah, that's the only challenge.
Okay.
Let's try and see.
Yeah, let's say 50 maybe. 50 units, right? Let's see what comes out. Oh, show. Oh, unpriced. So okay, look at that. But are there certain zip codes in Huntsville that are desirable?
I don't, Encore, we're only seeing.
Yeah, I'll tell you. I think I'll tell you which one was desirable area. I think we'll take this out. I've totally forgotten how to take this thing out of here.
Oh, that's okay. No, this is good.
Yeah.
Good
So
enough.
Madison is the most desirable area.
Oh, I see.
So I'm just wait a second. I'm trying to see how to. I'll just do that. Okay.
Sure. Oh, fabulous. Okay. Gotcha.
You can go in.
Yeah.
So
We got number 10. There is an apartment. Oh, multifamily. Yeah, there we go. Oh, student. Huh?
this is an A area. The interesting thing is these guys are like the main brokers there.
I
in
see.
the SVN, and every time I've talked to them, they have always given me like overpriced.
Oh,
There's a-
really?
Yeah, yeah.
Uh,
These guys are like, I mean, I've seen most of the listings
hmm.
have been with them in
Oh,
Craigslist.
wow.
Yeah,
Wow.
I've talked to both of these guys. Have
Oh, you have.
multiple other.
Yeah.
Yeah, but it's a solid area.
Mm-hmm. Mm-hmm.
964 days. We want to look at it?
Yep.
Yeah, sure. Oh my gosh, that's like almost 3 years. They don't want to sell it, maybe.
Gold, right?
Yeah, very
It's
old.
like gold.
Oh,
Okay. And this is like our
916.
brochure formation.
They're showing these small homes. Is it like located 4 apartments in each fourplex, maybe?
6.25. I'm just checking, Winnie. Where's the
Uh-huh.
each
Yeah,
portfolio
great.
consists of 8 buildings.
8 times 4. Is it 32 or how many?
Quadruplex located in
Quadruple.
Marbella.
Yeah, yeah.
One, two,
Yes,
three,
yes.
4, 5. Yeah, these are the 8 buildings.
8 buildings. Yeah,
Seller has
yeah.
agreed to continue and finish the exterior renovation.
Hmm.
The new asking rent will be 950 per month. To follow this trend, area has seen 10% rent growth over the past couple of years. Current owners have vetted the tenants an excellent working class base, pays the rent and takes care of the property. Cap rate is also reasonable. They're saying net operating income is 204. At 204, I don't know, 204 is really.
That high? Yeah, 204 NOI. And they want 3. Hold on. Did you see that? So divide that. What's the cap rate? It's pretty low.
He said 5.11.
5.11. 5. No, how is that true? The sales price is 3.4 million, let's say, right? So 4 million and NOI, what's the cap rate?
5%.
Yeah,
Oh,
NOI
it is.
yeah.
Okay.
5%.
That's all for this episode of the Investor Impact. Stay tuned for the next episode and don't miss out on the opportunity to learn and grow alongside this powerful inner circle.